Narendra Modi-led government is preparing for a fresh round of mega bank mergers. You're aware that 5 years ago, a merger of public sector banks has taken place, and thus the total number of the public sector banks has reduced from 27 to 12. Now they want to merge some of these public sector banks together and reduce the total number of the PSBs. As of now, there are 12 PSBs. We really do not know how many will be merged. But the government is moving very fast on its planned merger of banks. So let me at the outset discuss why is government mulling a public sector bank merger. So the idea that's being contemplated is to make a very big bank. The argument of the government and the argument of protagonists of the bank merger is that Indian banks are not big in size compared to the global banks. So therefore, they do not meet the aspirational India's financial requirements. So it is a fact that Indian banks are not as big as global banks. Nobody can deny that fact. So among the top 100 banks, 100 largest banks in the world, only 2 Indian banks figure in the list. One is the State Bank of India at 43rd position, and the other is a private bank, HDFC, ranks around 73rd in the total number of 100 banks. So let me make a comparison with China. On the contrary, among the 100 largest banks in the world, there are 21 Chinese banks, whereas we have only 2 Indian banks in the top 100 largest banks. Among the top 20 banks in the world, there is not a single Indian bank, but there are 7 Chinese banks. So this shows how big are Chinese banks when compared to Indian banks. So the government argues that India also needs such a big bank to compete in the global economy. Let me also give another comparison in terms of the total assets of State Bank of India are compared with the global banks. So the total assets of State Bank of India is $0.85 trillion, less than $1 trillion. A trillion is 1 lakh crore. On the contrary, one of the largest banks of China, Industrial and Commercial Bank of China, ICBC, total assets are to the tune of $6.7 trillion, which means the Industrial and Commercial Bank of China is 8 times larger than the State Bank of India, 8 times. Let me also quote another comparison. All the 12 public sector banks put together, the total asset size is $1.95 trillion, little less than $2 trillion. Still, the Chinese bank is nearly 3 to 4 times larger than the total asset value of all the 12 public sector banks put together. I'm not talking about SBI in particular. So let me also give third comparison. There are 135 commercial banks in India. All the banks put together, total asset value is around 3 trillion, still much less than one bank of China called Industrial and Commercial Bank of China. So now let me give a comparison between Indian banks and the American banks. All of you are aware of the 2 prominent American banks, JP Morgan Chase and Bank of America. So JP Morgan and Chase and Bank of America, the total assets are to the tune of $3 to $4 trillion each, which again doubled than the total asset value of all the 12 public sector banks. When compared to the SBI, they are 4 to 5 times larger. So there is no quarrel in the argument that India needs a big bank. There is no dispute about it. So, but the question comes is, the big banks should be created only through merger of the existing banks. So scale is important. There is no doubt about it. But how to achieve this scale is a factor. Let me again compare with the United States and China. US has 2 big banks, JP Morgan Chase and Bank of America, whose asset base is $3 to $4 trillion. There's no doubt about it. But there are 4,000 banks in the United States. So this does not allow the monopoly and the complete concentration in the hands of JP Morgan Chase or Bank of America. That's what the diversity of American banking system says. On the contrary, what are we doing? We are reducing the number of banks. We are comparing with the United States. Why can't we have a China big bank in like ICBC in China? Why can't we have a Bank of America in India? But why can't we have 4,000 banks in America, like in America? We have only 135 commercial banks. There are 4,000 banks in the United States of America. Look at China. China has a multi-layered banking system. There are rural cooperative credit banks. There are city commercial banks. There are policy banks. So there are big banks in China. At the same time, there is a multiplicity and diversity of banks both in the United States and China. So we are not learning from that. We are learning only in the aspiration of big bank. So big bank are essential. Indian banks need to grow. There is no dispute about it. But at the same time, the scale need not necessarily be achieved through merger. So that's the second part which I have to say. Then the third question is why the government wants to do it at this point in time. Well, government thinks that this is the most opportune time to do because the public sector banks' balance sheets are very clean. So there are significant profits among the public sector banks. In 2024-25, the total profits of all the 12 public sector banks put together is 1.78 trillion rupees, 1,78,000 crores. So the gross non-performing assets has come down to 2.6%. Well, how did it come down? We all know the story. Many of these NPAs, which means the long-standing, the long-delayed loans, repayment of loans. So all these bad debt or the toxic debt we call, they have been written off to a great extent, and through the insolvency bankruptcy code, they have been resolved through the haircuts, which means if a particular company has borrowed 100 crore loan from a bank, so the loan is resolved by paying 30 crores. So that's called the haircut. The remaining 70 crores are haircut, and finally the loan account is closed and balance sheet looks clean because these losses are absorbed with the profits which the banks already accrued. So that is a different story. But the fact remains that the gross non-performing assets have come down to 2.6%, showing a clean balance sheet. So the idea of the government is that when public sector banks are profitable, when the balance sheets are clean, the political and operational risk of bank mergers will be much less. So that's the reason the Modi government is now planning to initiate the fresh round of merger of public sector banks called a mega merger. Then let us look at the risk associated with it. So the risk and benefits. I am not denying that the banks merger have no benefits. There are benefits through bank merger. The Reserve Bank of India study of the impact of bank merger between 1997 and 2017 revealed that with the bank's merger, the credit flow has increased, the deposit collection has increased, the operational costs have come down relatively because you have a larger banks, automatically the cost will come down, operational cost, because after the merger, post-merger, we have seen downsizing of the workforce. We also seen closing of the branches. So therefore, the operational cost will obviously come down. So the asset have improved, the credit have improved, the deposits have improved, operational costs have reduced. So these are the profits of the merger of banks. Of course, the capital adequacy is also improved, which means the ability of the banks to absorb losses. It's a big bank, obviously, the bank will have a greater fiscal capacity to absorb losses. So these are all the benefits of bank merger. Now let me come to the risk associated with the bank merger. The biggest risk is called the too big to fail syndrome. It's called too big to fail. When you have a very big banks, you can't afford those banks to go bankrupt. If one large banks becomes insolvent, that will have a debilitating impact on the entire Indian banking system. So latest RBI financial stability report warns this. The RBI study of contagion simulation, systematic contagion simulation, which means if a particular large bank goes bankrupt, what will be the impact? Well, the RBI reports say that the impact will be much larger on the entire banking system. So this is the first risk. When you have plurality of banking institutions, diversity of banks, the stability of the banking system is much better. So this is what the RBI financial stability report says. So what does it mean? Not just the scale, but stability is also important. The scale also need not necessarily be achieved through consolidation alone. Then the third aspect is in terms of the reach. Well, the studies have also revealed that if you consolidate, if you merge banks, the reach will come down. The accessibility to banking will come down because the diversity of banks essentially mean greater inclusivity, which means the remote rural areas, the unserved, unbanked population will have access to the banks. So the moment you consolidate and effect a merger of banks, the reach will also be negatively impacted. So not just the stability, the reach and inclusivity of the banks will also come down. So therefore, let us also tell the concentration of banks is not a good feature. Already we have seen, we already experienced a greater concentration. There are 135 commercial banks in India, but 3 top banks, SBI, HDFC, ICICI, they account for 41% of the total bank assets, which means the remaining 132 account for only the remaining 60%. So what does it? There is already very large concentration of banking business, and if this fresh round of merger comes through, there will be much greater concentration, resulting in a phenomenon called too big to fail. So therefore, the banking merger may have certain benefits, but it also has a significant associated risk.